everyone, welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra. You're watching your stocks this afternoon. Well, it's turning out to be a session which is definitely pressured for the mid-caps, but it has recovered from the day's low, so that's definitely a positive. We have the mid-cap index, which is still down over 500 odd points, but nonetheless, there has been a recovery which has taken place. But the advanced decline ratio is still something to really worry about for today's in specific, because yes, while it might have improved, because at one point in time I think it was at around 1:8, there's still a large gap which exists between both the advances as well as the declines. Currently we only have around 340 odd stocks which are advancing to close to 2,000 stocks which are declining on the National Stock Exchange. Similar ratio on the Bombay Stock Exchange as well. But nonetheless, we do have a lot of queries coming in. It's an active market. We have Rajat Bose from rajatbose.com to answer all of your technical queries, and Parthiv Shah, director at Tracom Stock Brokers, to answer all of your fundamental questions. Rajat as well as Parthiv, welcome to the show. Well, Rajat, I'm going to start by asking you about the markets. There's a recovery that we've seen. And not to mention that, the bank nifty is doing well. We have the banks, the financials, which are really powering ahead today. How would you approach today's trade? Do you think that it would be a further buy on dips?
Good afternoon, Ekta, and good afternoon, Parthiv. Thank you for having me on the show. Regarding the market, I would say that if you look at the bank index, that is bank nifty, that is 523 points up now. And even HDFC Bank, which had been otherwise positing a weak show, all these days is actually trying to recover. Chances are that it will actually cross 1450 and move further up. It is only a corrective rally that is happening in HDFC Bank. But striking feature in today's session is that while the Nifty has recovered by about 29-30 points at the moment when we are discussing all this, but look at Nifty Junior. This was 500 points down. Now it is 477 points down. That means the next 15, the Nifty Junior is basically the Nifty next 50. That is suffering very badly. So only the indices that attracts our eyes, they are in the positive, but otherwise things are not all that great. So this is a weak rally that is happening. If it maintains, if it sustains, then it is pretty good. Otherwise, keep a very close watch over the level of 22,268, which is the 9-day exponential moving average. So long as it stays above that, that is the Nifty, then there is not much of a problem. And if Bank Nifty can close above 48,000, then there is a possibility that Bank Nifty might actually scale up to something like 48,500 to about 48,700. CNX mid-cap is in very bad shape. In fact, I have my expectation is that CNX mid-cap might actually slide down below 48,000 level. Maybe that will happen tomorrow. Overall, you have to be stock specific, and buy on dips can still be done because the 20-day exponential moving average has not been broken neither on that day when it went down below 22,000 and nor today. So buy on dips is definitely a good strategy.
Okay, all right. Buy on dips is definitely a good strategy, but let's get in some queries now. We have Madhvi, who writes to us from Vizag, holds 50 shares of Tata Motors, which is bought at around 289 odd rupees. She wants to know what to do, whether she should hold or book profits, and if you do recommend an exit, which share should she buy for that amount for the short, medium or long term? Well, Parthiv, this one is right down your alley. Tata Motors is undergoing a restructuring. In that context, would you recommend investors such as these to probably book profits and wait it out and reinvest?
Good afternoon, Ekta, Rajita, and our viewers. Yes, absolutely. This company was recently in the news in terms of the demerger plans of its passenger vehicle segment and that of its EV vehicle segment. And historically, Ekta, we have seen that generally, whenever there's a mix of CV segment along with the passenger vehicle segment, the passenger vehicle segment, if the market share is reasonably good, which Tata Motors has been gaining, I think the valuations commanded a lot higher. Case in point being, if you compare Tata Motors in terms of valuations with that of Maruti, or for that matter, M&M, I think if you see Maruti commands a huge valuation premium. And I think this is what probably the Tata Motors management is looking to unlock. And I think it's very good news because even at this price, even before this news of demerger came, if you see the valuations, then Tata Motors is quoting somewhere around 18 times FY25, which is quite reasonable. And the momentum that they're showing even in the JLR business is pretty strong. And if you see the revenues, Tata Motors almost does a revenue run rate of almost 1,04,000 crores, thanks to the fact that JLR contributes a bulk of it. So going ahead, our sense is that this entity, which is the Tata Motors passenger vehicle segment, which will also house the electric vehicle business, I think should command more premium. As a result of which, more value will be unlocked for the shareholders. So I would suggest her to hold these shares for longer period.
Okay, you would suggest to hold the shares for a longer period of time. Well, technically, Rajat, what would you recommend on Tata Motors already sitting at fresh highs? Do you think there's more upside?
Yesterday was the day when Tata Motors posted a high, all-time high of 1,065. That is definitely something to be noted. But what is more intriguing is that there is a volume spike. There has been a volume spike. Perhaps the highest ever volume on a particular day was recorded yesterday along with the new high. And that is nearly 6 crore shares were traded. And the stock closed near the day's low yesterday and today also hovering around that level. Generally, this signals a top. But this time, since the market is driven by a lot of liquidity and lots of purchases are being made in stocks like Tata Motors, I wouldn't say that an investor should exit this, because in such situations, you should wait for, at least if you are looking at some kind of a big fall, then unless it falls below, say, 880 or something, that is the 50-day moving average, I would say an investor should stay put, because we have seen such developments which earlier would have been leading to a downtrend, but this time this could be a short minor correction. So as an investor, one should hold, but any trader going long at current levels, that could be a bit problematic.
Okay, all right, got it. So that's on Tata Motors. Let's get in another query. We have Reema, who writes to us from Mumbai. She holds 200 shares of Suzlon, which is bought at around 22 odd rupees. She wants to know what to do, whether any other good stocks within the infra space exist, and from a long-term perspective, and what she should do with this particular holding. Well, over to you on this one, Parthiv, take it away.
Suzlon has seen a fantastic turnaround story, no two ways about it. And they have one of the largest capacities in wind turbine manufacturing. And the entire ecosystem that they have built in terms of the technology as well is one of the best in the country. A lot of MNC competition is out. But my concern is the valuation. Even here, Suzlon is, after the recent correction, thanks to the news that came out from the chatters that government is looking at reverse auctioning mechanism, which is something which in the past had not boded well for more wind-related energy, renewable energy creation. And that is what which has spooked the entire sector of late. And even in Suzlon, we saw a massive correction. But even at this current market cap of around 52,000 crores, assuming that Suzlon were to do an EBITDA of around 1,000 crores, it's still quoting at EV/EBITDA multiple of 50, which is extremely pricey. And in the infra space, barring power sector also, a lot of other companies are available at a lot of attractive valuation, which have business models which can be de-risked as compared to focusing on only one source of power generation, which is windmills. So our sense is that Suzlon out here is a good exit for the investor. Her entry point is around $22, making good money. Surely one should exit here.
Okay, all right. So that's the call coming in on Suzlon. Rajat, do you have a view on Suzlon?
See, it is actually hitting circuits, I think, for the last couple of sessions, including today's. It might actually test its 200-day exponential moving average, which is currently around, if I'm not mistaken, around 32. So it can go down to those levels. If one is willing to take a bet, then one can sell. But otherwise, with this kind of liquidity, you would expect some kind of buying to come back around, say, 32 level. So if 6 points is good enough, then sell. Otherwise, stay put.
Okay, all right. Well, let's get in another question now. We have Vivek, who writes to us from Rajkot. He holds 20 shares of IREDA, which he's bought at around 112 odd rupees. He wants to know what to do, whether he should hold or sell this particular stock. Well, this is an interesting one, Rajat, because the stock is corrected around 34% from its all-time high. Do you think that there's maybe... It's still high it's still rallied from its issue price of around 30 odd rupees. So you're still sitting on massive gains. But nonetheless, in the larger context, do you see some amount of volatility in terms of the technicals?
Yeah, volatility would be there because it has pierced the 9-day, 20-day, and both the moving averages, that is 9 and 20, they are strongly coming down. It is testing its 50-day moving average, and chances are that that will also be broken. If I were in the investor's shoes, I would have booked profit, and fresh buying at current levels not really warranted because see, renewable energy, what kind of returns it will generate, it remains to be seen. See, I am a person in the market for more than 30 years, and I have seen those stories of NEPC, Mycons and all in renewable energy space. So I'm not too gung-ho about it at the moment.
Okay, and what about you, Parthiv? Would you recommend, say, booking profits? 20 shares is what Vivek has bought at around 112 odd rupees. Would you probably tell him to book some profits at these levels?
Yes, I do agree with Rajata's view. See, the problem is valuations. I think a lot of these PSUs, and especially the NBFC verticals of the PSUs, they have gotten massively re-rated. No two ways about it. There's a lot of cleanup in their book which has happened. And going ahead, looking at what the government's mandate is in terms of financing for a lot of renewable energy projects, going right up to 2030. I think one is penciling that a company like ADA, which currently has a book size of around 50,000 crore, would swell to somewhere around 250,000 crore over the next 5 years. I think it's a Herculean task and a lot of funding will be required. And I think a lot of returns from the existing RE projects would be required. So we are a little skeptical out here because it's quoting at almost 3.5 times price to book multiple, which is very pricey for a PSU NBFC lender. So I think we'll take a back step and we'll suggest, the investor to book profit out here.
Okay, all right, fair enough. Well, we need to take a short break, but we have a lot more queries lined up. So stay tuned. We'll be back with more. Welcome back. Well, important to monitor the internals of the market. So like we've been pointing out, the mid-cap index is down around 1% We should probably pull up the small cap index as well, which is underperforming. So the small cap index, the BSE small cap index is currently down around 2% The Nifty 50 next is also trading with a loss of around 0.7%, recovered a little bit from the day's low, but nonetheless, all of these indices are under pressure. But let's get in another query now. We have KS Rao, who writes to us from Andhra Pradesh. He holds 200 shares of Rain Industries, which he's bought at around 70 odd rupees. So he's sitting on a good profit there. He's a long-term investor, wants to know what to do, whether he should hold these shares for a period of 1 year or not. Well, interesting question there, Parthiv, because generally there's a little bit of trepidation which is now coming in from the into the mid caps. So if an investor is sitting on good money, do you think it might just be prudent to take some off?
See, yes, absolutely. And especially in a stock like Rain Industries, where definitely there's a huge amount of cyclicality. No doubt, companies, one of the global leaders in terms of its capacities of calcine, petrol, coke, where they sit at almost 2.4 million metric tons per annum. Coal tar distillation also there at 1.3. And the advanced material production is also there. And they have some scope in cement as well. But the problem is that, this company is definitely at the mercy of the global commodity cycle, especially in the the non-ferrous space and the aluminum market. And historically, we have seen that there are huge cycles, and rail industry also has faced the brunt of a negative cycle. And especially at a point in time where currently rail industry is sitting on decent size of debt, and it has international operations which are not doing extremely well. I think not a bad idea for the investor to exit out and book the gains.
Okay. And technically, Rajat, what would you recommend on rain?
Since there had been good amount of buying over, barring this week and the week prior, there had been strong buying with high volume. I would say put a stop loss below, say, 158. That's roughly about 10% from the current levels before you exit, because this might give another jump and then you can come out of it. But one thing definitely I would concur with Parthiv is that unless the recent low of 220 odd levels is taken out decisively, it may take many months, could be even a year to cross that level. So, upside is limited, but one can calibrate one's exit.
Okay, one can calibrate one's exit when it comes to rain industries. Let's get in Pankaj, who writes to us from Hyderabad. He holds 250 shares of ONGC, which he's bought at around 250. He wants to know the future prospects of his investments. What would you recommend on the technicals first, Rajat, on ONGC?
ONGC's rise is parabolic, and the weekly chart shows that there has been very strong upsurge. Normally, with this kind of, if the Bollinger Band, 20-week Bollinger Band is, the lower band is around 160, which is the 200-week moving average level, and the upper band is 290 odd. This kind of band actually goes for compression, and then there is the stock falls. So in this case, either you put a stop loss below, say, 250, or else you can decide to exit at current levels. Of course, we cannot predict the top, or we cannot say that you are not going to see not more than, say, 10% or 20% fall. So if you are not greedy, book your profits. Otherwise, put a stop loss at 250 and carry on till it breaks that level.
Okay, all right, fair enough. So that's the word coming in on ONGC. And that's all the time that we have on the show as well this afternoon. But do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade today.